welcome back. I hope you're doing really well. Thank you again as well for the love and support on the most recent video. Seriously appreciate it. And I won't be going anywhere. There are plenty more crypto and Hedera related videos coming out from me, particularly as we are continuing to see massive amounts of development, adoption, and acceleration of the Hedera ecosystem. Plenty of stuff to be covering and staying up to date within this space, particularly if we do enter a massive crypto winter. This gives you a fantastic opportunity to allocate more sort of dollars or currency to Hedera tokens themselves. Hopefully by the next sort of bull run we see, whether that be in the next couple of months or years, you will have a larger position to take advantage of. But of course, make sure that you understand what you're buying and you're doing your own research. That's what this channel is all about. Right, let's jump into this, as there is a lot more information in these markets today, more so than the weekend. And also I have got a fair few Hedera updates. So first thing first being the Fear and Greed Index. We're back at a historical low of 8. And we bottomed out here a couple of weeks ago as well. Historically, we have seen when the crypto Fear and Greed Index is at these extreme fear sort of levels, it is a potential buying opportunity. And obviously, when we're in the greed zones, that could be time for a market correction and potentially if you take some profits from those positions. I think this is still a lagging indicator and we may see further moves to the downside for the Fear and Greed Index. So what am I actually doing? Many of you that follow me on Twitter would have seen that I had basically said, and in the previous video, I'd said that I would be waiting until Wednesday to Thursday to allocate additional capital to the markets. I will continue to buy these dips. However, I am waiting for the Fed meeting on Wednesday, Thursday, for the interest rate increases that we will be seeing. Now, it appears that many analysts and banks have warmed up to the idea that a 75 basis point rate increase will be happening this week. As I mentioned before, it was unknown whether many analysts had realized that the Fed was going to be more aggressive this time around. Now, many of them are. There may be less risk from this rate increase on Wednesday to Thursday. We will only see, though, how much of that information was priced in on those dates. Hence why are we waiting? We can also see the bond yields are pointing to the possibility of a more aggressive Fed rate, as the yield on the 10-year Treasury shot up to 3.37%, while the 2-year yield, which mostly closely tracks Fed intentions, has accelerated to 3.34%, i.e. they're expecting 3.34% interest rate over the next couple of years, which aligns with what the Fed had been saying previously. I think they've been targeting roughly 2.5% at the minimum by the end of this year for interest rates to hopefully curb inflation. Changes in the economic outlook, including the likelihood that inflation hasn't peaked and is still running well ahead of the Fed's 2% goal, could influence a bigger rate move during the 2-day meeting that concludes Wednesday. A 75 basis point move is a real distinct possibility, said Leesman. And as I showed in the previous video, a couple of banks were on side with this as well. Goldman Sachs is altering its own expectations of a 50 basis point move to 75, citing the journal's reporting and noting that the newspaper had a day previous reported that the bigger move was unlikely. The Wall Street firm's economists now see consecutive 75 basis point rate hikes in June and July, followed by a 50 basis point move in September and a 25 basis point move in November and December. I.e. what they're saying is the Fed is going to ramp this up severely and then begin to ramp back down towards the end of the year to get inflation under control. So we could see a considerable amount of pain now until the end of the year and inflation begins to cool off. They are really waiting for that sign to show that inflation has peaked before they will begin to stabilize or lower the interest rate hikes. If we actually take a quick look as well at the Bitcoin price, obviously we wicked further to the downside. I said in yesterday's video this was a complete possibility that if we did not hold that $28,000 level, which we didn't, we'd drop down to the low 20s, and here we are now. We're at the $22,000 level. Where do we go from here? Like I said, I'm waiting till Wednesday, Thursday to see really what happens. If it is an aggressive hike, potentially could be even worse than 0.75%, although I see that as being unlikely and excessive. What we will see is a further move to the downside, and we're probably going to come down to somewhere around $18,000. If we actually look, many people have been covering the Bitfinex Bitcoin leverage long positions. I've touched on this many times on the channel, and there's two different ways to look at this. There's two different perspectives to take. Now, this is in a historical zone, and it represents the total number of Bitcoin held in a margin position on the Bitfinex exchange to the upside, to the long. This is the only data for one exchange, but makes the assumption that as a data point, it represents the state of trading ecosystem as a whole. What this data shows is despite the drop in price, or rather because of it, traders have been aping into the dip with larger amounts of leverage than ever seen before. This could mean one of two different things. Traders using high amounts of leverage are effectively aping in to get severely rewarded for taking on large volumes of risk if the price rebounds towards the upside, or traders are using high amounts of leverage, will be liquidated and create an even more rapid cascade of price decline if the price continues to fall. Think of a reverse short squeeze. These long positions will get liquidated, forcing them to sell the Bitcoin in order to cover their margin, rather than a short squeeze where they have to buy up Bitcoin to cover their margin. Time will tell. Do these traders taking on excessive risk get to win? Another question, if so many people are buying to dollar cost average and or speculate, why is the price falling? So there's some conflicting information in these metrics themselves. The nominal amount of Bitcoin held on leverage is still very, very high, and the nominal amount has fallen recently, but only due to the price decline. Liquidations from all leverage taken from May to 2022 onward do not seem to be happening yet. So if the liquidations aren't happening, why are they still accumulating massive long positions leveraged to the upside? Either they're completely aping in and fundamentally don't understand what the markets are currently doing, or they have some additional information that this will be the bottom, things aren't going to get much worse, and they can hold out these long positions. The other thing to mention is these long positions do not state what the expiration date of that long position is. I'm guessing they're fairly short term. However, they could be misleading, as they could be very long term expiration date margin utilization, which means they could actually weather out this storm regardless, although it would still speak to reason that they'd wait for the price to come somewhere near the bottom before taking out a leveraged long position. So take that with a pinch of salt. Again, conflicting indicator. This could turn sour very quickly because of this exposure. If we do see another massive wick to the downside, it could just be further cascaded due to liquidations. If we actually do look at those liquidations, we can see some of them in the past 24 hours. 165,000 trades were liquidated, with the total liquidations coming in at 707 million, so nearly just shy of $1 billion of liquidations in a day. The largest single liquidation order happened on BitMEX with XBT USD at a total value of 4.5 million. We can see there Bitcoin at 15, just shy of 15 million liquidations in dollars, 22 million on Ethereum, some on Solana, and throughout the rest of the chain. So liquidations are actually happening, not at the scale that we would expect though for the wicks towards the downside. I've seen many people talking about Michael Saylor recently, obviously the CEO of MicroStrategy, Bitcoin Maxi, and is very bullish on the crypto space in general. Just be careful of misinformation. So ironically, these tweets have appeared in my feed side by side. You can see Blockworks saying MicroStrategy risks a margin call as Bitcoin drops to $21,000. We can also see 3 hours just after that tweet, Michael Saylor actually said, when MicroStrategy adopted a Bitcoin strategy, it anticipated volatility and structured its balance sheet so that it continued to hold through adversity. MicroStrategy has a $205 million term loan and needs to maintain 410 million as collateral. MicroStrategy has 115,000 Bitcoin that it can pledge. If the price of Bitcoin falls below $3,562, the company could post some other collateral. See slides 11 to 12 in Q1 2022 presentation, i.e. they basically can't really be liquidated out of their position unless Bitcoin falls into the region of $3,500. Seriously, what's the likelihood of that happening? I think we'd be more concerned about the global markets in general. If Bitcoin does fall that low, as something very severe would have to happen in order for that to take place. We're going to see much volume as the Bitcoin price continues to fall, from either people selling, but also people swallowing up those sell orders in order to accumulate for the next run that we see inevitably. If we're looking at crypto layoffs as well, and talking about what's happening with the CELCIUS exchange, we can see there are vast layoffs across the crypto industry at the moment, as many of their portfolios are obviously tied to the performance of the crypto industry, as high as 20 to 25% in some cases. We see Coinbase there at 18%. I believe that was 1,100 staff laid off due to this recent crash. And this tied in with what is happening with the CELCIUS exchange, locking up withdrawals and preventing users from actually exiting the platform. It just goes to show that you need to be very careful with centralized exchanges, as you are not the custodian of your cryptocurrency. This has happened several times in the past and will continue to happen several times into the future. Make sure you're very careful about locking up any cryptocurrency assets either in centralized exchanges where you do not own the keys to that crypto, but also decentralized exchanges that promise incredibly high rates of return. You need to think where that return is actually coming from and understand it to ensure that you are taking a measured or calculated decision, calculating the risk of what could happen if everything goes wrong. And not only that as well, you need to be making sure that even with decentralized exchanges, that they aren't doing something sort of shady. There is no such thing as a free lunch. Make sure you are doing your research before aping into positions. Jumping across to some of that Hedera news now. So it's official. We are proud to announce that 1 million mainnet accounts have been created on the Hedera network. Obviously, we're continuing to see the Hedera network grow at unprecedented rates, and we can't wait to see what the future holds. See your 2 million accounts. This is a fantastic metric to finally see on top of Hedera, particularly as more and more businesses and as well as retail projects are entering the space. We're proud to also announce from the HBAR Foundation the latest partnership with MERKLE Science, a crypto risk and intelligence platform, enhancing Hedera's network participants' ability to identify and mitigate fraud and crypto crime. So alongside this, MERKLE Science is committed to creating Hedera-centric educational content on topics such as developing and operating a compliant crypto risk framework. So severely bullish to see as well. And they are focused on ensuring the network participants have access to best-in-class crypto threat detection, risk mitigation, and compliance solutions. This in turn enables Hedera in its journey to build the world's first mass-adopted public DLT. It's brilliant to see that the Hedera Foundation is continuing their journey to accelerate Hedera forward in all different walks, from scalability to security to adoption. They are making sure that all their bases are covered and they aren't leaving themselves exposed to anything. I retweeted this the other day as well, and I've seen some comments from you guys about EARTHLINGS.LAND. It is a metaverse community launching on Hedera where you can play quests to earn the in-game token STEAM, not Quest. Early participants will be rewarded with fewer than 200 Discord members currently. It could all be well worth investigating. So I will leave that Discord link down in the description for Steam. There is a white paper at the moment. However, this summarizes it here. So for play to earn, as mentioned before, you do not need to be a plot owner to fully participate in the metaverse. All you need is a free app like 𝗟𝗓𝗡 or the MetaMask wallet to store your in-game rewards. There are many ways of earning Steam token, and as the gameplay evolves, so will the possibilities. We strive to create a living community with many ways to generate income as possible, ever growing our economy. Here are just a few examples. So for all the quests in the game, it is possible to win Steam tokens or NFT prizes. You can then sell those NFTs on the marketplace. NFTs come in the form of plots, vehicles, status symbols, upgrades, rarities, collectibles, and rare technology. So really interesting stuff there from those guys. And if we actually do flick over to their website, we can see EARTHLINGS, a play to earn metaverse, changing the game for everyone. You can download the white paper. However, just to summarize here, EARTHLINGS, one can complete quests to earn the in-game Steam tokens, track down collectibles, as we said, explore the gigantic 2,800 meter squared map for lost cities and civilizations, invest in real estate property in the main cities or buy a town, villager or plot of land, become a mayor, shop owner, tech specialist, banker, or even an airship captain and earn Steam tokens. We won't forget strategic gameplay either, combining classic gameplay with the metaverse to give you the best of both worlds. So obviously this looks very reminiscent of Sandbox and those other types of metaverse games that have done incredibly well over the last 12 months or so. And hopefully this, obviously leveraging Hedera itself, should be just as good an experience as that. And this may be a great opportunity to get involved with the metaverse on Hedera early before many people do. So make sure you do check out their Discord server. I will be looking more into this as more announcements do come out from it. However, it's great to see this area developing on Hedera as well. Quickly wrapping up the video, we have another announcement from STADER Hedera talking about their V2 product launch. As was discussed in that interview, if you haven't seen that, make sure you check it out on the channel, either with 𝗟𝗘𝗙𝗥𝗥𝗔𝗟𝗦 or from the STADER team. The product should be launching very soon, which will enable you to unstake if you do wish to do so. However, another fantastic promotion from Stay tuned, stay HBAR excited. Brilliant stuff from the team, and hopefully we will see that launch soon. Of course, there'll be videos from me on the channel showing you guys once that has gone live. Until then, thank you very much for watching, and I'll catch you in the next one. Cheers.